China down 2%, 10%. We're up 1%. I don't get it. We got to figure out what's going on in these markets today. For the last couple of weeks, we've been talking about the Titanic, bobbing back and forth, bobbing back and forth. Is it time to retire that saying from the show, that metaphor? Or are we just bobbing and weaving, getting ready for the big plunge? The captain is back, and he's going to get the crew in line. If not, they're going to the galleys. Mitch, let's start the show.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Nice of all of you to welcome me back with a 80-point overnight range. Let's just talk about where we are right now. We're up 27 handles at 37.91. We all know about the number we're keeping an eye on for this week, next week, and the next month. 38.20. We got a triple top there. Dollar backing off a little bit, but up today, up 35 cents at 112.32. TLT, we're working our way towards the 80 handle. I don't know where this Fed pivot's coming from, but the bonds are saying no, 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 no. Crude down a buck 13, 83.90. Gold still hanging out in the mid 1600 handle, down 330, 1653. Silver clinging to 19, up 9 cents at 19.16. Bitcoin doesn't move, up $200 at 19,395. We only have less than a month to get it up to 50K for Thanksgiving. And Ethereum futures, they're up $50.50 at 1351.50. Let's bring in Triple D. Triple D, I mean, could you be like, you come in, we're off for a few days, we come into this market and they're throwing a lot of stuff at us. I know.
Mass confusion.
Yeah. What do you think? I mean,
I don't even know what to think of this market. So I left and I was a little bit confused on this market because it's a really tough market to call. But then you take 2 days off, you kind of lose your feel. You're trying to watch, the markets as you're on your vacation, but at the same time, it's difficult, So you're out of the loop. You're not at your screen. You're out of the loop. And then you come back in and they throw a China massive sell-off at you and a U.S. stock rally. I mean, that's not out of the playbook. I'll tell you that much. Money Mitch, we're going to lean on you here because this is a confusing market for the majority of us, but you've been here the last couple of days. Please enlighten us on what the hell is going on.
All right, well, before we get that, I wanted to get our energy going. It's Monday morning. We got to get ourselves a little loosened up.
Are we going to
guess what?
Stuff?
The boys are back in town. Yeah,
love the song. You're getting fined for that probably, but love the song.
All right, we're getting
nothing
on back.
like a little Thin Lizzy to start the show, That's going back to our day.
Oh, with the call too.
Yeah,
that was your song back in the day.
Yeah, boy.
Mitch
boy.
You.
The one they showed the wrestlers, I was the one in the middle. Just to let you guys know. But
you're leading us out there. All right. Well, the boys are back in town, and I will tell you that what really is going on here. It looks like the pausing hike rate boys are back in town. That's what's going on. So it seems like there was a report, and this came on Friday from the Wall Street Journal, that the Fed would be likely to debate on a smaller interest rate hike rate in December. Not the one that's coming up right now in November, but the further one out in December, raising hopes that the central bank, of course, would be poised to adopt a less aggressive stance here. Now there's a 50-50 chance of the Fed going for a 3/4 point hike on the December 13th, 14th meeting, and that's coming from the CME Fed tool. So that's the outlook now. it seems like there's an outlook that the Fed is going to get less aggressive, even though, and I will state it, I'm sorry to be the bearer of bad news, but nothing's changed, team. Nothing.
We are still Titanic bobbing something fierce here. I mean, we left and we were Titanic bobbing, and I missed the last 2 days, and we're still Titanic bobbing. I think we still do the Titanic bob. I mean, it's a nice rally. Wow, you know, getting up to that 380 level where we said we'd have some massive resistance. The bears are just scratching their heads because the news flow is not good. I mean, this China situation, we're going to have to talk that in a minute. This is one of the biggest sell-offs in China, like in one day sell-offs I've ever seen.
I know.
I mean, if you would have told me I'm going to come in and China's going to be down 10%, I would think the U.S. equity markets would be getting hammered. And we're rallying. So deglobalization right in front of us here. I mean, this is the way it's going, where we're going to start looking, you know, to not lean on China as much. And the U.S. markets are saying, we don't need to follow China's lead here because we're going towards deglobalization and we're our own market. So we don't care that the Chinese market is falling 10% here this morning. But if you're invested over in China, holy mackerel, you're definitely not listening to the pre-market prep show if you got all these stocks, because we've sold them all, but a long time ago for worries about this. But Alibaba, $63 this morning.
Oh.
It's down over 10% here this morning. It's down 11% here now. JD.com down 15% here just this morning. These stocks have already been hammered. You wonder if this is capitulation. Baidu, you know, is down another $11. I mean, this is a classic capitulation. I mean, this is like drifting down, and collapse. I don't know if I've got the guts to call the actual bottom here on China, but if you were looking, you know, from the textbook capitulation, we got capitulation this morning in all these China stocks. Pinduoduo, PDD down 16%. I guess they don't like Xi going to be in full control here for, it looks like, the foreseeable future. So in any regards here, what a mess in China.
Yeah, it seems like they're getting wrecked, of course, on the ideology-driven policies will outweigh the growth outlook.
Well, nobody believes the numbers either. So, you know, the GDP, whatever. We know we can't believe any numbers coming out of China. They got 0 COVID cases, for crying out loud. So, I mean, you can't believe anything coming out of there. That's one thing. So they just discount. They get that 0. And then you got Xi. And what'd you say over the weekend, Joel? They're grabbing the predecessor out of the stand.
It was
going in like.
Yeah, oh yeah, you're out of it. It's, you know, it's just like if you know, if we had someone come in, like 2 people, and put their hands under Mitch's arms, you know, and they picked Mitch up out of the seat, and he was trying to talk to me and you, and we were just nodding our heads, and then they just picked him up, and then he just walked away, and then that was it. And then they went on with the meeting. So saw that clip a lot. And I guess, I don't know if he had any pro-Western views or there's an extra bunk with Jack Ma. I'm not sure, you know, what it was. But I was like to say, Baba, all-time low.
Is that the all-time low? Because there's
no,
data
I have
before
it
that.
ready. I have it ready here for you guys.
It went lower than 57.20. Yeah, I got it.
Oh, look at Joel. Look at Joel. Got it.
Are you sure though? Because there's data before. It didn't come out 2014, did it? Wasn't it before?
Yeah,
that?
it did.
That was 2014. That's the start.
Yeah, this is it. This is all the way at the end.
So what's the all-time low?
57.20.
Is that not incredible? We're talking about a company that has grown tremendously. Now we're talking about the stock going to all-time lows.
That just
Nobody wants to invest in China at all. The stock was $319 about 2 years ago now. It is now $63. China investing has just been the biggest disaster that, you know, we've seen in these markets in a long, long time. And 2 years of straight down feels like capitulation, but I'm not going to try to call the bottom on any of this stuff because it's to the chat's question. Somebody just asked, what happens if they invade Taiwan? China stocks become like Russia stocks. That's what happens if they invade Taiwan. You know, and look, and the Russian markets aren't even reopened yet. So seriously, if China invades Taiwan, the Chinese markets will look like the Russian markets. So that's why you pretty much can't touch them because of that wild card. If for whatever reason, you know, we don't get an invasion and deglobalization doesn't happen, we start to make amends somehow here, all these China stocks are so cheap. That's, the one consideration. And there's going to be the value investor saying, how can I go wrong? How I can go wrong is if China invades Taiwan and we go and the China stocks become like the Russian stocks. So you've got to be careful investing over there. So I'm not touching any of them. But what are you going to do? I mean, if you're in these things, do you sell them now, Joel? Is it like just take your last $63 and run? I don't know if you do that either. It's a wild card because we don't know if they're going to invade Taiwan. I feel like, when these things are going like this, eventually there's going to be some type of bounce. There's been bounces before. They're so bloody oversold. It feels like classic capitulation today. It makes me want to buy them, as a contrarian, but I can't.
It hasn't worked. It hasn't
worked. No.
You also got possibilities of fresh export curbs out there with China. Of course, this would be for emerging technologies like quantum computer and artificial intelligence. It seems like the tensions just keep rising between China and the U.S.
This is just unbelievable, the sell-off here. And then what's more unbelievable is that the U.S. markets are up. I'm flabbergasted here.
Yeah.
So to Zoltan's point, he's scared of a pull in the U.S. markets here. I am too. I mean, I don't understand how you can get the China markets looking like this, and I guess the Russian markets look like this now too. I guess they're just throwing them in there with the Russian bucket. So, but the difference is we get all our stuff from there still. I just don't know, we aren't, we might be moving towards deglobalization, but we
doesn't happen overnight.
Doesn't happen overnight. We're a long ways away from there. And then let's go to your original point here. We're just, coming Debbie Downers here a little bit here today. But to your point, Mitch, and, this could be interpreted either way. But to your point that you were talking about with, the interest rates and, that they're going to take their foot off the pedal. Well, I was in Montreal. That's where I was over the weekend for my anniversary. And I can tell you, there is absolutely no recession to be seen happening in Montreal. And everybody else is saying the same thing. That Apple store was lined up to get somebody. It was packed. Not like lined up. And then somebody, a friend of mine from Florida, was saying, his Apple store is lined up around the block still. And I'm looking at the malls and these things are packed. I couldn't find a parking spot in the one mall. I couldn't find a parking spot. I'm are you kidding me? I'm where is everybody getting the money?
It's lagging effects.
I keep thinking with interest rates going up that it's eventually going to show up. But, savings have went down. It just hasn't hit yet. People are not out of money yet. And what does that mean? It means the Fed's not taking their foot off the pedal anytime soon.
Exactly.
There is no inflation getting in check in Montreal. There is, you know what my breakfast cost me, Joel, in Montreal? I had, and it was a nice, decent restaurant. Expectation, they'd have those in Toronto too if you're Canadian. Guess how much? And it's Canadian dollars, so you got to knock 30% or 25% off of it. But what do you think breakfast cost? Me and my wife.
$48.
$80. It was $80.
Man.
Well,
each breakfast meal was $21. That was just for your basic omelet and your fried potatoes and a little.
You got a mimosa too, right? At least.
No, and then just the juice. The juice was $6, and another. I think my wife had an orange juice, and it was $6 too. So $12, and then you had the 21 and the 21, and then you have HS or tax. You know what sales tax is in Quebec? 15%. So you have 15% on top of that, and the tip was $81.
Well, Dennis, you're pretty much telling me the expectation here now is moving to 50-50 chance for the Fed to hike 3/4 of a point in December. What do you think about those expectations?
The expectations are that the Fed is not going to take their foot off the pedal anytime soon. There's going to be Fed talk that will squash those Wall Street Journal rumors probably coming, and then all of a sudden it's like, whoa, but again, we are in a different type of market. So we just gave you all the bad news, but all the bad news we've kind of been talking about. China's been going down. We still see inflation's not in check. We kind of knew all these things. The market is taking it in stride. So that's the bad news for the bears. So the news flow seems like it's just going to keep getting worse, but it doesn't matter because the bears are now hugging, for whatever reason, a Wall Street Journal article that maybe the Fed's going to take it a little bit easy on us in December. Silver lining market, USA, is happening here right now. So how do you go bearish when you see the markets responding to all this way? So,
Dennis, again, I'll let you finish this rant, but you gotta start going on vacations and go to breakfast with me.
How much is your breakfast?
Okay, because
Where were you? Stop. Where were you?
I was in Florida, in Boca Raton, Florida.
Oh,
And
Boca Raton.
we have, oh, I got to bring this up. We have this famous place that we go to. It's called Tom Sawyer's. Okay. It's this old, they make it like an old cabin. Okay. And here we go. For Lisa and I'm telling you, I was stuffed when I got out of there. I
Yep.
had the Huck Finn, which is
Look at
2
this guy.
fresh
Look at
eggs
this
cooked
guy.
to order,
Look at this
4
guy.
French toast sticks. Okay.
Oh, you got the
And
menu
I was
here.
a bad boy.
I got to get the glasses even. Make it bigger. I cannot see
I got
it.
you. I got you. Here's the weekend menu.
Okay.
So you guys can
Well,
eat
that's
up.
not bad.
And
$13.
$10.95. And we got out of there for like with a nice tip for $30.
Yeah, that's
And
how you
and I
do
got
it.
bacon with it. Don't you know, the bacon was really good.
But
Did you just drink water? You just drank water though.
We did, yeah, we did.
So the juices would have brought you up to like 40.
Yeah.
And then you'd be at like 55 Canadian. So gone are the days where you go out with your wife to eat for $20 though. Gone are those days, right? Those are never coming back again. When I was in New York City, I remember being in New York City with my wife probably 15 years ago. And I had the jaw drop on the breakfast bill, and it was $45 US. I was like, how did I just pay $45 US? I wish I could go back to the 45 fancy, New York breakfast for $45. What's a fancy breakfast in New York City cost nowadays? There's a question for you. So, I mean, inflation is everywhere around us. It's here. The recession is not here. And that's, good in a way, but bad in a way, because it means that the Fed's going to still keep their foot on the pedal. And it just means it's going to be that much worse, I think, when it hits. Yeah. There are people, like you see the savings rates, they're showing the U.S. savings rates, how they've just plummeted. You just see that Twitter chart over the weekend. It was floating around, that the savings rates are gone because everybody's used up their savings because, their bills are so much more money. What happens when your credit card's jacked and you have no savings? You're going to start eventually spending less. So I still got to think it's coming. But for now, I mean, let the good times roll, at least today. Let the good times roll, at least today.
There's two things I could take out of your talking right there, Dennis. There's one that I would take that maybe recession is still down the line. And then there's the second thing that's actually a positive outlook would be that maybe these earnings aren't as bad as we expect them because really the economy is still holding on. And so maybe that we could climb the wall of worry right now in the Q4 and then be worried about maybe going into next year that we start seeing recession and really start showing up. So that's what I would say at this point to me. Short-term bullish, long-term still in a bearish trend.
I think I'm in the exact same camp. And I think from just getting out there and, maybe it's Montreal, maybe it's still bustling, maybe it's the area I'm in, but I went around, we drove around all areas, Laval, we went out to the outskirts and it's where it's like really busy there too. It puts me on the same page with you here, Mitch, that I'm just thinking short term, I think the recession hasn't hit yet, but long term, I think it eventually has to. So it still makes me want to have some cash. But I can't argue with this market. And, I was tweeting out Thursday morning, I did buy some more stocks for the long-term portfolio for the simple reason that I didn't like having 48% cash. I brought it down on the last dip to like 44. I'm down like 39, I think. So I'm still a lot of cash, but I'm like nibbling a little bit. I don't know like if that's the call or not, because everything around me says, what are you doing? Don't buy anything. I mean, eventually we're going to get hit here. But logic is not working in this market again. It's illogical once again. And this earnings season may not be that bad. I mean, if those stores are still busy, maybe we get through this earnings season. We had an AMD warning, we had a FedEx warning. We can see a little bit, but it's not getting hit hard yet. Maybe none of the mega caps warn. I mean, we're going to hear from them. Maybe. Yeah,
this is a big week. This is a big. Yeah,
do you have an earnings calendar for us, Mitch?
Yeah, of course.
Yeah,
we have
just real quick before we go to the calendar, I am upgrading Delta Airlines.
Unbelievable.
Oh yeah. I mean,
Delta's
on time, both ways, good service. Got to watch Top Gun, was it 4 or 3 or something? Maverick on the way there. Caught the football games on the way back. Broke out above 31. I mean, now you got resistance just a little bit over 33. Your high from Thursday was 33, but I mean, airport packed, restaurants packed. I mean, I don't know. I don't know. Maybe it's just the places where we went, and maybe maybe we're just being myopic in our view. But I mean, people are still spending money. This economy is not getting ready to croak. And that just goes the whole thing. I don't think about like they talk about the pivot. I mean, only doing a half instead of three quarters. I think that talk. I mean, I think we're going to be hearing that same talk all the way through mid 2023, and even in the later 2023.
Yeah, I mean,
what's wrong with just sitting tight? Why does rates always have to go up or down? I mean, they're going to keep taking them up until they show a dent in the CPI number. But I have to agree with you. It is jammed out there.
It's jammed out there. So,
right.
so maybe you've got to, and we can't argue with it. It's why I've been buying stocks on pullbacks here. To Laura's point, I mean, you can't argue with it. You can't argue, Laura's point in the chat. You can't argue really, and she's been bullish for a while, so good job here, Laura. I mean, the last few weeks, it's changed. It's what we talked about. We've talked about the turn. The sentiment has changed. It's why I've been buying dips. It's why I tweeted on Thursday before I left. I was like, I got to buy some more stocks. Everything tells me, my logic tells me to be bearish for the simple reason I'm seeing global, why, as I was saying illogical, Laura's asking questions, so I can answer on the show here too. What I'm saying about illogical is that there's two main reasons. One, the US markets are decoupling and completely ignoring global markets now because we are not seeing those types of rallies, especially in China. But two is it's fighting the Fed. I mean, they're ignoring, the last CPI data. They're ignoring the Fed. So that doesn't mean...
This is just on a report. Remember, this is on a rumor from the Wall Street Journal.
I hate those.
Well, but it's not totally. It just kickstarted it more. We were already seeing this happen before that Wall Street Journal article. We saw them buy that bad CPI data.
100%.
We saw them turn. You called
it. Was a low of the move.
You called it. You called it that maybe this is the capitulatory move that the market's been looking for. Where we were just, boom, we flushed 100 points there in about 100 seconds, it felt like, Joel, on that CPI data. And I was just on the shelf, flabbergasted too, jaw dropper. I'm like, are you kidding me that inflation hasn't come in at all with all this Fed action? And you know what? They turned around, they bought that. They shoved that down the bears' throats, and the bears are caught now. And the bears are still holding to this. So I think you've got to just, nobody has a crystal ball. And again, back to that Goldman Sachs trader that said it last week, nobody knows really what to do right now. I'm in the same camp. I think everybody is confused on this market. And you got to look at the economy. The economy says we can handle higher rates. That's what the economy is saying.
That's what they're saying. Yep.
We can handle the higher rates. We can handle our mortgage payment doubling. And then in some cases that's what's happened.
That's what this economy
the mortgage payments are like trying to double on you. So there's obviously been enough money that there was enough savings to handle it in the short term. I don't think it can handle it in the long term. So I don't know when that starts to materialize, but it doesn't appear like it's going to materialize this quarter. So not from what I'm seeing out there. So and maybe not even the next quarter. Then you get into the holiday season and maybe the next quarter too. So hard to just stay on the bear train. So that's why I've started buying stocks in the long-term portfolio. I'm still trading market neutral, not with a bias here, because it's too confusing to have a bias. So I'm going to stick with that call. Some people say market neutral is not a call. It is a call. It just taking advantage of inefficiencies, buying dips, selling rips, kind of just, not biasing yourself to just buy dips or just sell rips, doing both. The chop, the Titanic chop, just kind of taking advantage of that. That's a market call too.
I'll tell you one stock we definitely will be watching this week. It's going to be Tesla, but they are down this morning because shares are down after the price cuts in China. Looks like the starting price for Model 3 sedan was cut to 265,900 yen. And then it looks like it's gone down a pretty significant amount. I mean, when you're seeing here, I think this is more of a call out for Tesla, talking about their demand going down, and they're bringing down these prices because they need to sell the vehicles, right? They need to keep up with the deliveries. And I think that when you're seeing, the kind of destruction that you're seeing to the Chinese economy, you can just imagine how the demand for vehicles will go if China's in a recession. And essentially, I mean, look around. Look how China stocks are doing. I don't think there's going to be high demand for EVs in China next year.
This is weird that Tesla, I mean, is just not participating here at all. And to the contrary, see a lot more of them on the road.
A lot of them. I was going to say a lot of them on the road.
A lot of them on the road. You made a new low for the move here overnight at 202. It just keeps banging on the door. Yeah, it just keeps bang the real session low. We hit 202. That was on the 20th. I stand corrected. We didn't quite get there yet in the pre-market. But you know what I think is ailing this stock?
What's that?
Twitter.
I think so too. I think you're right.
I just.
There's a bigger question, right?
Yeah.
It's not only just about Twitter, though, right? It's will Elon sell?
Well, he have to sell more stock. That's the biggest question.
That's the biggest question this week for Tesla.
I think you're right, Joel. I think that's the wild card here. I'll say on Tesla, if you want to take a shot, you can. As long as the stock's above 200, you're only $8 away from there. So you're really risking 3-4% to see if this dip gets bought today. So you could take a shot. There's a trade set up that you could take a shot. I would stop myself out under 200. I wouldn't want to see this thing go sub 200 and be long it. So I think as long as it's above 202, call it 200. We'll just round it to 200. It's got to stay above 200. If it takes out 200, then you got trouble. But right now, you've got a lot of more stocks rallying. They were trying to rally this on Friday, Joel. They tried to participate it from the chart. I wasn't here on Friday, but
I didn't.
From the chart. They were trying to buy this dip. I think that they might come in and buy this dip this morning, but it all depends too. I mean, we're starting to roll over on the U.S. equity markets too, and I'm just still shocked that the U.S. equity markets can be up on a day that China's down 10%. So there's a lot of things to grasp here, especially being off for 2 days. And other things being equal, if I thought the market was up, I think that they would buy this dip in Tesla. I think there might be money managers saying, hey, I need to get some U.S. exposure. Here's a great company. The quarter was fine. I can get along with Elon Musk. I got the 200 to lean on. I think there'll be a few people. I think you'll find some buyers down there near that 200. Sub 200, it gets interesting though.
The monthlies here. I mean, it's bearing down on the new lows for the move. He himself said that it's he knows it's overvalued. He made that statement himself. And then also I saw he's planning on cutting 75% of the workforce. Cat Weasel makes his
he's got to do something. He's got to turn that thing profitable. He just overpaid by a ridiculous amount. What did it end up being? Like 44 bill he paid for this?
Yeah,
he knows it. He said it on the Tesla call.
Snapchat told us
that he knows he's overpaying, but he's being forced to at this point. He screwed up.
Yeah,
and he should be forced to. I mean, he made a deal. The deal is binding, so he knows. So where do you think Twitter would be? Look at Snapchat. At $7. Look at Pinterest is held up just because of Elliott, but look at Meta. Where do you think Twitter would be right now without the Musk deal?
Who likes Snap now?
Nobody. But I'm asking you guys a question. You can in the chat. You can answer there too. Where do you think Twitter would be without Musk? What price? Where would
$30?
Be?
$30.
Much lower.
I think
it'd be sub 20.
Yeah, 20s.
I think sub 20. I think you could have 19 handle on it without Musk. For the simple reason is that since that deal, Snapchat has collapsed. It's a pretty good proxy for this. Yeah. Meta has collapsed. It's a pretty good proxy for this. So you can say easily lots of 20s and 15s. Chat, I completely agree with you. I think it's a teenager. I think without Musk, Twitter is a teenager. And it's not going to happen because it's going off the board. He's already committed to it. But I mean, if this deal didn't happen, if this deal wouldn't have happened, it's happened already. It's going down. But if it wouldn't have happened, I think Twitter's in the teens. So he's overpaid by this, by the tune of like $25 billion. And he knows it. So he's going to take, and he's probably a little pissed off about this now that he's being forced to eat this, which he should be. He shouldn't be pissed off, but he should be eating it. So I think, I don't even know. I think that he's probably going to cut whatever expenditures he can cut out of there. So I'm not surprised that he's going to be cutting, the labor force. He's going to try to turn that thing around. And he might be able to do it. But that's not going to help, obviously Twitter shareholders are getting their 54 or 20, and then that's going to just be it.
It's supposed to close on Friday, right?
Yes.
28.
Yes.
I mean,
there's still $4 a premium and it's supposed to close on Friday?
Yes.
Yeah. I'm telling you, this saga is not over. I mean, if you're, if there's $3.50 you're risking. I mean, I wrote an article and I looked at it, and I guess the $1 billion buyout, he can't do that because they're going to sue him, that he's still going to lose in court. I mean, right now, I'd be having my lawyers. I'd be looking at that $1 billion buyout. I'd be writing a check. I would be like, please, I'll give you $2 billion. I'll give you $3 billion. I'll give you $5 billion for this company. I mean, if you're holding on for that extra three, the whole world is convinced that it's going through. He's going to buy this thing at 54.20. Holy man! I don't know.
What happens to Tesla though if he actually does sell some more shares?
Oh, it's going to go down, but
yeah.
How far though? I mean,
well,
it could.
I don't think it goes crazy because I don't think he has to sell. Like, what did it say? It needs probably.
I don't know, man. You put a link. He went to Wall Street to get money and he tied it to his stock. I mean, that guy's brilliant. Why would you put the price of your stock in the crosshairs of Wall Street bankers? I mean, it's like so anti-Elon to do that. Like Bank of America, who are some of the other, like someone pulled out of the deal? Why?
Who wants to be part of that deal?
Yeah,
why would Twitter either?
Why would they do that? I think Bank America is part of it. I mean, they're all just licking their chops for that that strike price. Now I know it's split, right? So I know there's certain margin calls and stuff, but boom, boom, boom. It's pressure.
It's going to be pressure for sure. Let's move over to Bank of America continuing, and they went with a downgrade today on Meta. So Meta platform shares downgraded to neutral from a buy. Stated here is while fourth quarter and 23 expectations have been lowered, we expect the advertisers' budget cuts in early 23 to weigh on sentiment and drive added uncertainty on the post IDFA changes and real transitions. This came from analyst Justin Post from Bank of America. And
it's the biggest value trap on the street. I've been calling this for a long time here now. I'm going to continue to call this. I went on Facebook. I never go on the app. I went on the app over the weekend because, you sit in your hotel room. You're like, what's going on Facebook? It's all advertising. I'm like, I can't even see what your friends are doing anymore because it's literally friend, ad, friend, ad, friend, ad. I mean, it is just brutal experience. Zuckerberg, if you're listening, absolutely brutal experience.
I've said it. They saw the writing on the wall.
I'm like, holy mackerel. This is just an awful experience. I even tweeted about it. Awful experience. And not like it used to be whatsoever. I don't even know if I'm ever going to go back on. Like, I may never, like, it hardly ever get me on there on Facebook. So I'll probably maybe never even log back into it. So, like, before, the only reason I didn't have even the app on my new phone when I got the Apple phone. I didn't even download the Facebook app. So, Instagram, I don't know. I never on Instagram. So maybe that's still popular. They still have some stuff. But I'm going to tell you, TikTok eating their lunch. The legacy businesses are a mess here. And if you're leaning on, they're going to be part of the metaverse, welcome to 2030, 8 years from now. The market doesn't wait around that long. I think Meta is eventually under $100. I think everybody's going to continue to say, so much cash, so much value. Well, they said that at 227. It's now 127. What have you done for me lately? Nothing. That is what they've done for you lately. They've changed the name of the company from Facebook to Meta. Nobody even knows what it is. The legacy businesses are under attack. It is just awful. And I've been dead right on this all the way down. It's going to have some rallies. Nothing goes straight down. But I think when we look at this, 3 or 4 months from now, I think this thing is under $100 regardless of where the market is.
I think that also, like, the coming out with like the metaverse, now I think if anything, that people have learned over the last couple of years is like the opposite of the metaverse. Like, do you want to be on your computer? Do you want to be in some reality? Do you want to be walking or hiking or biking or swimming or doing things outside? I mean, who wants to be looking at a screen? I mean, it's just, and the numbers bared it out. What was it last week? I can't remember. Where they're just not getting that participation in the metaverse that they wanted. I think it's lost its way. I mean,
its way.
If you don't think it can go any lower, take a look at the BABA chart. I mean, these things are just, I don't know. It tried to rally a couple days last week. Bank America, I mean, they sacked Apple pretty good, but that's kind of coming back in their face. They did the downgrade with that along with Bloomberg, but that's actually come back to that area. So it's that, it's weighing on the issue today. I'm going to look at the pre-market low. So I wouldn't fight this. 127 is the pre-market low. And then what's the low for the move? You're risking down to 122.53. That's been the low of the move, and that's even below the pandemic low. It's the lowest you've been since early 2009, early
Because
2000.
look at the Snapchat chart.
Oh, yeah. Yep.
These businesses
There's a
are
big,
just, all the
there's a big
legacy
thing,
businesses
though,
are getting
right?
TikToked.
It's a lot on what was said in this note, right? It's the change in ad revenue that is coming towards these companies. They saw the writing on the wall. That's why they changed their name to Meta. It's because their ad business, their whole model is now completely having to adjust. And so they're trying to get ahead of it, but what will be their price by the time they actually get to that point where the metaverse is actually a driver to their revenue?
Yeah.
That's the truth.
He may be right to be doing this switch. Like maybe the metaverse, and maybe we're all going to have our Oculus glasses on in 8 years.
You saw the writing on the wall about ads, that ads are slowly going away because of all this like cookie battle that's going on the web, on the internet. And I think this will continue moving forward. So, because everyone doesn't want to be tracked. That's the whole move forward out of this, is data tracking, right? And so now he needs to adjust and create a whole new company. He's going to probably do that, but at what price, right? What will be Meta's price when it gets there? All right, let's get towards Mitch. Our Monday, of course, it's time. And you guys in the chat, I know you guys will probably be excited. You guys can jump around, dance like we love to do it, because it's time for Market Structure Monday.
Just don't dance like Dennis.
Why not? Get a little boogie going. Tim Quast here from Market Structure Edge. Welcome back. It's Market Structure Mondays.
Good to see you guys. Happy Monday.
Happy Monday, Tim.
The Quast.
I want to take it just off the hop here, and I don't know if you were listening to the last conversation, but we were basically bashing the hell out of Meta. And I just want to see, what does the market structure say? We'll finish the conversation on Meta with Tim here, because he's got the data. Let's see what the data is showing, on supply demand for Meta, because I just think this stock is a mess from everything that I see, but maybe it tells a different story in the market structure. Please tell us, we're going to jump right into it, Tim. I didn't even ask you how your weekend was. We'll ask you that, but we'll jump right into Meta.
And if you've never looked at market structure, the mechanics of the market, this is Meta. and Mitch, I heard your comments. I don't know. It's, if you're deciding that you're going to go all in on a world that doesn't really exist, I'm not sure how that works out. But this is demand. The green part of the graph is an algorithm that meters buying and selling by traders and investors. This is closing price. This is supply. So supply is short volume. And here's where we are. We actually have rising demand, but it's good. But it's at 3.4. So it hasn't been above 5. I always say that you could build a portfolio of stocks that stay above 5, and every time something drops below 5, you get rid of it and you replace it with something that's staying above 5, and you'll probably outperform the market. So that's the bad news. The bad news for Meta is in this time frame, and we could back up, it has not been above 5. That's why the price is down. It's been hated
for a long time.
It's been hated for a long time. If there is good news here, it is that there's a divergence between demand and supply. And when supply and demand diverge, prices rise. It's very much like an economy. So is there a probability here that despite all the bad news, that Meta
maybe it's all in. Maybe all the bad news is in it.
Could be. And remember that the good news and bad news is only one driver behind price. There are people who trade short term, who will look at the bids and the offers and say, I think I could make this price move. There are asset allocation models that are going to treat Meta as a value play, a low volatility value play. This is the big one to me, trades associated with derivatives. All of those have equal authority, if not greater, to set the price of Meta than do the views of folks who look at the fundamentals. I mean, what's a better illustration of that than so Citi downgraded American Express last week and the price went up. So what difference does that make, really? I mean, if I were betting on price, and it would be a bet here, and we could talk about that because it's one of the things I wanted to mention. Just remember the words straights and flushes, and we'll talk about this. But that divergence could mean that despite all the bad news in the short term, Meta could rise.
There you go. So maybe there's a potential for bottom to be in. I'll just say, if you're taking that bet, I am not. If you're taking that bet, 122.53, the low of the move has to hold, because you know what's going to happen when it starts taking out that low of that move? That supply is going to start rising on you there if that takes out that low of the move. So if you're making the bet, the 122 is the level you need to be leaning on, in my opinion. So as long as above 122, you can jump in, try to take another bet, but always have an out. I mean, Tim, this is what you do too as a trader. You have a contingency plan on everything, do you not?
I trade probabilities. So, and let me tell you a little story, because this will help it stick, you guys. So I know a professional poker player who, I mean, he's a businessman. He was very successful. He took a software company public, and he's an engineer, and he's good at math. And so he would come join our little Friday evening get-togethers where we're playing Texas Hold'em and teach us to play Texas Hold'em, because he'd won, World Series of Poker bracelets. He's pretty good at it. And he said, he gave us this little adage. He said, people who chase straights and flushes borrow money to go home on buses. The probabilities have to be in your favor. And I see this all the time from folks that I trade emails with. Somebody will take a big flyer on something, and I'll look at the math and say, why did you do that? The math is telling you not to do that. And remember, people like Jeff Yass, founder of Susquehanna International Group, SIG, he is a fantastic poker player. The whole high-frequency trading world is full of people who understand probabilities. And so poker is not gambling. Poker is probabilities. And you want to stack the probabilities in your favor. So I absolutely agree with you, Dennis. Would I buy it? No. I'm just saying that there's a chance here that the price would rise. There are many better things where the demand side is higher. Money. Exactly. I'm absolutely going to look for something with better probabilities than that. I'm merely saying that it's possible that people who are betting on probabilities think that over the next 3 days or so, Meta could rise, and people will go, oh, maybe the bottom's in. And about the time you buy it, they leave. So beware of that.
That's how it goes.
Yeah, Tim, we were struggling on the pre-market show. We're talking about, China, what's going on. We were, just talking about the eyeball test, which I've been talking about for a while. And you just wanted to comment on the CNBC poll that says consumer pessimism about the economy hit a record last week, surpassing the record in 2009. I don't know if I agree with that survey. But still, it's just the ultimate contrarian call here that stocks are rallying in the face of consumer pessimism.
It's a great question, Joel. So that poll, I heard that poll earlier today as well, and there are a bunch of data points behind it. You could look at the projections for companies' earnings. There was a clear downtrend. Could we see margins turn negative? That is where you get top line, bottom line, and what's between them, and that begins to get squeezed. Margins decline. So we've got people who feel uncertain about the economy. We've got financial indicators that say things could be difficult. Got a lot of big important people saying we're concerned, from Jeff Bezos to Ray Dalio to Jamie Dimon. And yet stocks on Friday had everybody said, it was the best week since June. No, it was a terrible week till Friday. All the gains were Friday. And then people said, it was a great week. No, Friday options expired. Back to straights and flushes. The reason that the stock market rallied on Friday, folks, is that options expired at the close. And so if you had a big basket, and that is in a sense gambling. So there are machines that will scoop up devalued options and try to drive the underlying up, and then there will be a tug of war all the way till they expire, and then something's got to give. And I would submit that the counterparties, the ones who sold volatility, were forced to cover those bets before the options expired because people used them. So then the whole market surges and everybody thinks, well, everything's better. Well, it's not a reflection on the economy. It's a reflection on how the market works. By the way, today, new options trade. And I would look at the math and say, well, there's a reasonable probability, and I told the edge users that the market does pretty well today. I think that there will be short-term demand from short-term money for the new series. How do I know? Because I look at the demand side in the broad market. This is the S&P 500, and it's not great. It's at 4.6, but it's rising. And the supply side is falling. It's the same divergence that you see in Meta. It's not awesome, but it's a divergence that should produce gains for a few days. But is it because the underlying economics and sentiment and so on are good? No, it's because this is how the stock market works. So again, in that environment, it's not that I would go buy Meta. I want to find stuff that is a little ahead of that. That's what I would be looking for. But,
do you have anything? Do you have anything on your shopping list for this week here, Tim?
Oh, absolutely. And I did something I don't normally do. I bought stuff fairly early in the day on Friday because I looked at the supply demand equation and said, well, I think there's a pretty good chance that that's going to produce gains. So I bought stuff like Scorpion Containers, STNG. I'll show you that.
Yeah.
Not because I thought that it would zoom then. I think that in the next 2 to 3 days, I could get some pretty good returns in this. And here's why. It's that demand is very strong and supply has fallen. Well, is there a probability out of that if the market moves that I get a reasonable return? I even know how much. I know how much that stock moves every day on average. So I know that I have a reasonable probability of a 4% return in that stock. Again, I'm not chasing straights and flushes. I don't get it right all the time. And I share with the edge users, when I get something wrong and when I get it right, but that I think is a pretty good probability. If I look at here's Benzinga October 24. Notice that the demand side is very strong and the supply side has dropped below trend. That's the stuff I want. But it's short term. If I get the gains that I'm after, I move on. And it's really got nothing to do with fundamentals. I'm not looking at earnings or earnings expectations. I'm very careful. I will always go check the earnings calendar before I buy something to check to see if it's about to report results or if it hasn't, because you can get caught out. But here are things I like. STNG's on that list. PSX is on that list. CMC, which is a materials company, is on that list. Nutanix. Now there's deal speculation in Nutanix, so you've got to factor that in. But I like the supply-demand balance. It may tell us that there's some merit to those rumors of a deal because the deal arbs are betting in favor of it. Here's home bank shares. I actually bought a load of that on Friday, hundreds and hundreds of shares, because I thought it's possible. They've already reported. They went down because not of earnings, because of options expirations. They reported in the middle of options expirations. Don't do that. And so it gives me an opportunity. Doesn't mean I'm going to be right, but I like the probabilities in all of those.
All right. Now, there was, of course, some big boys reporting this week. What do you think about some big tech coming into play?
Well, who would you like to look at? Let's see. We've got We've got Google tomorrow, right?
We got Apple.
Show us that earnings calendar, Mitch. Bring up that earnings calendar.
Yeah, I got it right here.
Okay,
here you go.
So
here's the calendar. There's, of course, Alphabet after Tuesday and Microsoft. And then later in the week, you got Meta, Amazon, Apple. You pick one of these.
So let's take Goog. It actually looks pretty good.
Yeah, I like to see the goods.
Right. I'd look at this and say there's a strong probability that Google rises with results. And it's because demand is above 5, has ticked up, and supply has fallen. That tells us that hedge funds are betting long. Again, they aren't necessarily going to be right. But the beautiful thing is we don't have to know all that. We don't have to know global macro, what the asset allocators are doing, what all the analysts are saying, all those kind of things, earnings versus expectations. All we have to do is look at the math. Well, the math is biased to the upside now. It is. So could Google do well? Yeah, probably could.
You know what I like about Google here too is that it shrugged off the Snapchat numbers, and we've seen before where Snapchat disappoints, which it perennially disappoints, and you know, it hammers Meta, it hammers Google. Wow, Google turned around, they opened low, and then they started, you know, and actually I believe it closed higher than the previous day, or close to it anyways. Yeah, it closed up $1 from the previous day, so on Friday. So that's the good news for Google. I am long still. Google is one of the largest positions in my long-term portfolio. I've been long it for a decade. It's one that I did not hedge. I hedged a lot of stuff. Did not hedge this just because I still believe in this company. I kind of like the chart here, actually. I like the action from Friday. I wasn't here on Friday. I was away. But I like, you know, when I look at this chart and Snapchat, you know, it shrugged that off. That's the good news. Now, again, you know, earnings is going to be the crapshoot here. When you get a stock that reports earnings, fundamental news trumps all. So if they come out, you know, Tuesday night and doesn't have a good quarter, stock could still get hammered. But right now, it looks like there's buyers coming in on the dips.
Most of the time, when the math looks that way, stocks perform well. I said last week too. I tweeted. I said to the edge mob, hashtag edge mob, that unless the supply side improves in big tech, it's going to be hard to post gains. There was an example of an improved supply side. If I look at Amazon, I feel less good about Amazon. It's got rising demand, but the supply side's rising at the same time. The trend is fine, but these aren't the kind of conditions that tend to produce gains. And we'll go look at any stock that moves. SLB, why was SLB up 10% last week? You could look at any stock that reports results, folks. You can do this with Edge. Look at the supply-demand equation, and it will generally tell you why stocks are moving. You could, why was that stock up? And you could look and say, oh, the supply dropped in advance. Most of the time, the bets on what direction things are going to move will manifest in the supply side more than the demand side. Why is that? Because the bets come in the form of derivatives. So demand up here is actual effects on the equity. Supply can be anticipation of moves. If I know that a bunch of people bought calls on a stock, I could infer as a bank that maybe people think this stock is going to rise, and I'm going to hedge myself accordingly. I might hedge in favor of the direction. And so that's what we're going to see in the supply side, and you can use that to your advantage. Doesn't work every time. I always say options expirations can distort that, but it is a great way to see which direction people are betting.
Tim, Frank's asking about supply demand on BABA. We talked BABA here already, and I'm curious as well, because this is like, man, it just feels like a capitulation in China here this morning. I mean, again, we've got, down. Now all these stocks go down another 10-15% here over the weekend. I mean,
Hang Seng was down 7%, and it's a mess over there. It's just a mess over there. I don't.
You ain't touching.
I wouldn't just not touch anything that relates to China right now, right? But again, from a supply demand perspective, short term, if you're going to trade BABA, I would encourage you not to. But if you look at the supply demand equation, so see this slight rise in demand, fall in supply suggests that there will be some demand for the new series of options traded today. And that could lift the price for a few days. But if any side of that equation changes, you need to get out, because these data tell me it's not sustainable. I would liken this to, let's go look at something that does do really well. Look at PSX, and you could say, well, oil isn't doing great. Well, look, PSX, COP, that's the kind of stuff that produces gains. Notice how the price, no matter what the market does, it continues to go up. Well, because demand is falling. It's a little above trend now. We're about out of the run in PSX, but that's the difference. So again, you may love BABA and say, man, I'm just a big believer. Well, you got to divorce yourself from that idea and just go trade the stuff where the money is, because that's the probability. Don't chase straights and flushes. because that leads you to borrow money to go home on buses.
Greyhound buses.
Greyhound buses. Right, Greyhound buses. No, not a chartered bus. You're going home on a Greyhound. Yeah, so you don't want to do that.
Timing is more important than love. We get some wisdom from Tim Quast today. I appreciate you like always. And definitely, I saw people in the chat mention about a Market Structure Edge Twitter. I'd have to ask Tim if there's an actual handle just for Market Structure Edge, but it seems like they want it, Tim. So good idea given to you by the chat today.
As I recall, because I don't man, I do _ Tim Quast, right?
Exactly.
Tim Quast. I think it's at Edge Structure. At Edge Structure, I believe is it. So
check it out.
And I'm trying to copy that, but I mean, social media is what it is, but it's got its useful features.
Definitely, and don't forget, guys, you guys can test out Market Structure Edge for yourself. Appreciate you like always, Tim. We'll see you next week. Have a good one,
guys. You as well. Thank you.
Wow.
All right, let's take a quick peek into the markets. How we looking at there, Joel?
I'm just trying to get after this almost 80-point range overnight. We're maintaining green. And I mean, the close is 20 handles away, 23 handles away. So I'll call that support. And then I just want to, we just got to focus on this 38.20 area, because I think that is where the bulls really take control here. We had two highs, one at 1950 and the other at 38.20. That was and one right up in that area. We're pressing it up against that. 38.13 is your pre-market high, but this above this level, then the bulls are in total control here of this market, and the dip buyers were there overnight. And you could call we're up 24 handles. I'd just be really impressed, because we get through that 38.20 during this week or next week, then I'm looking above 3,900. So on the downside, it's hard for me to find support now. I mean, just for intraday support, because how many people are scratching your head about, wow, I really missed the dip now. And then even as late as Thursday last week, you're still, okay, we're going to go back down to 3,600. And then, you had that move on Friday. So interesting market. Tim gave us some good input. I was just looking at this Google chart, and this thing it didn't react that well. I mean, it did okay in September, right, with the market. It never had a meaningful retracement, really, of the from the all-time high move, and it's been a laggard. It's just been out of the news. It's been, who knows about the advertising? If you worry about advertising, Google has some of the other components. I just think the big thing behind that is YouTube. And, that's just, the way that they're expanding it to bring the revenues in. But it's trying to hold. You can always lean on the low of the move at 95.
I mean, nothing matters on technicals really on all this stuff, because the fundamentals are going to trump it all this week. You got to bring up the earnings calendar here once again. We're going to get so much meaningful fundamental information here. Again, the channel checks from me in Montreal and Joel in Florida say that, hey, we might get through this earnings season okay still, because it's still busy out there. And these are obviously earnings, from 2 months. If it's busy now, it was probably busy, a month or two ago as well. So it just hasn't started slowing down yet. So I think this earnings season still could be okay, but just look at the names. I mean, today is kind of a quiet day. Always Mondays are a quiet day, but tomorrow, from the big guns, Alphabet and Microsoft, and you hear from Visa and Texas Instruments. And then on Wednesday, we're going to hear from Meta. So that'll be a big tell. And obviously Ford's going to report there as well. But Thursday is really the day where we're going to hear just from so many major companies. In the morning, we're going to hear from Caterpillar and Shopify and MasterCard. And then on the night, Amazon, Apple, Intel, Pinterest. The list goes on and on. That is just such a huge week. It's hard to make a technical bet ahead of so much fundamental information. So I want to see what these earnings are going to be. I'll tell you from the channel checks, maybe they're going to be okay. And you know what? Are we in this market, Mitch, where if you get a big dip in one of the big guns, does it just get bought because, people are like scrambling now to get money back into the market? Maybe. I think we do, and we can say hindsight capital is always 2020, but that CPI day where, you know, we had the big reversal. Those lows from that day, that seems to be the low. So now we got to like lean, you know, and look from a bearish perspective, trying to be bearish here. Nothing's telling me on the U.S. tape, ignore overseas markets because they haven't participated as much. But to Spinner's point, even, holy mackerel, J.P. Morgan, Joel. I mean, the banks, they just turned around and they have bought the banks nonstop. This is supposed to be, you know, stocks that suffer through a recession. Not seeing that whatsoever. The banks are getting bought heavily. I mean, J.P. Morgan, look at this move, 101 to 122. In 6 days. What kind of stock is this? It's a 20% move in one of the biggest banks in the world in 6 days. I think on pullbacks, people are going to be buying these things now. So I don't want to chase here, but you get back to 115. Do you find buyers? I think so.
Yeah, ever since he called for another 20% down.
The stock has went straight up since he called for the 20% down. They'll call it the Jamie Dimon bottom.
Yeah,
he was bearish down right at the lows.
Yeah,
but his stock's doing well.
All right. Well, it's always, you know, it's after a day like Friday where we weren't here, obviously, and also, you know, when you're seeing the, you know, the follow through and pre-market, it's always, you know, excited, to get, okay, yeah, that's a major bottom there, that like a COVID bottom that we made at 3,500, but. Oh, a lot could change during the day. I just like to see us, just hold on to these gains, and I don't even have to take out 38.20. I think today, on top of Friday's action, to hold on to the gains and show it, set us up for earnings. So great to be back in the saddle. I already feel like I'm back focused in on the markets here. So Triple D, go get them. I know you got a boring morning because you don't have any positions.
No overnight positions.
Yeah, so
like besides my long-term investment portfolio.
I'll check in with you around 10
o'clock.
Trying
to get the feel, so I got to get the screen time and to get the feel to obviously, get back in the swing of it here today. So I will be trading. Obviously,
big help to Mitch. Thanks, Mitch, for manning the ship while we were gone and get us back in the groove here. So I'll check in with you guys later on.
Of course, Joel, getting on out of here. I got you, Dennis. I'll get you something to get ready for the bell. I'm thinking, and I normally am not this type of person, but I'm thinking today should be I'm looking for topping action on ExxonMobil. We have oil starting to come down. We look at this, we're right near those all-time high on ExxonMobil, at least for the 52-week high. 52-week high at 105.57. We're at 105.60s right now. Did we put in the top there? We'll see what happens.
You're looking for a double top potential here?
Yes, exactly. A double top and then starts pulling back. Does it mean that it's coming back there to like maybe 90? Nah, I think you're at least going to come back. I'm looking for that 100 retrace now that we've gotten to the high. And also I looked at WTI today just to kind of point out crude. Crude is going down. The level that I would be watching for is a break of that 83. If it breaks 83 today, I think you'll start getting this retrace in these oil stocks. Remember, oil stocks were as high as 88 last week, at least on the WTI front month. So that's a trade that I'm going to be watching towards the bell. We'll see what happens in the oil stocks.
You know what's really impressive about this latest move in all these oil stocks, is the divergence here between oil really hasn't gone up much. The oil price, like if you look at the USO, it's kind of just hanging out. Yeah. But I mean, you've seen this just incredible rally in the oil stocks, and that's what they're coming in to buy stocks. They've been buying the oil stocks. I've not been on this trade. I bought Oxy. Oxy was okay, but I mean, obviously I should have just backed up the truck at the end of September and bought them all. And I mean, hindsight capital's 2020. It's hard. I can't come in here now. Like you can trade anything, day trade, sure. But I can't come in here now from, a swing trading perspective and be buying these things now. I've missed it. I mean, the trade has just moved. And obviously, if you get a period of consolidation, maybe you had that a week and a half ago, you could have struck again from a swing trading perspective. But it's been a tough swing trading year. That's why I keep saying the day traders are winning in 2022. The day trading has been excellent in 2022. As long as you're able to go both ways, long, short, there's been lots of opportunities, from a trading perspective. But if you're just long swings, it's still been tough. So I don't know. I just, when stocks have moved up like Chevron from 140 to 172 in 3 weeks, I'm like, well, it's had its move. The easy money's been made there. Maybe it's going to have upside capitulation and it's going to be, a big move here too. But I'm not chasing these from a swing trading perspective.
We'll see what happens today. Like always, Dennis, you go do what you do best and get back in that hot seat. You're right back at it, my friend.
Try.
We'll see you tomorrow, like always.
Okay,
it's time to keep battling. All right, guys, I'm going to bring you over to live trading now. As we continue the day, of course, we got some great action today. We'll be getting into live trading with Lord Ryan Zunaid, and I am excited to get into it. You guys see my outlook already a little bit on oil. Going to be watching different stocks. Like I mentioned earlier, I'm a little bit more in the short-term bullish camp, long-term bearish. What does that mean? So I think that we could rally up to maybe even the 380 mark before we start seeing a decline. So this leaves room for a couple of days. We'll see what happens today. We're already kind of getting up there towards resistance. I can see resistance around 378, but we'll look for some pullback. Let's see what happens towards the bell. Come over to live trading and stay with us right here on Benzinga. See you guys over. And like always, team, one thing I did want to tell you about is check out our Future to Crypto event. This is going to be going on in New York City in early December. So you guys want to get your tickets now. Check that out. I'll go ahead and make sure to throw up the link, and we'll see you next time right here on Pre-Market Prep.